Hello traders, I'm very happy to see you here today. Timing is of utmost importance in swing trading profitably and consistently. If you are doing longer term investment, it may be alright to buy a few days later or close the position a few days later or earlier. It does not matter because it is long term investment in supposedly fundamentally strong stocks. But if you are swing trading and certainly day trading, timing is of essence. In swing trading, if you are late by one day, that means your risk has increased if the stock has moved already in your direction. Stop loss is further away. And if you had a target in mind based on chart resistance pattern or the usual move that the stock does in an upswing, then your reward has reduced. So every day that goes by, your risk goes up, reward goes down, and more often than not, 1 and certainly 2 days of move makes a perfectly valid swing trade untenable. To time the market, of course, you have to find a fundamentally strong stock. You have to know the right time to buy. You have to check, if you are like me, that it is in a strong industry. But before all of that, you have to know if the market is telling you it is time to buy. What is it telling now? It is telling me that if I have to choose between buying and shorting, it is time to buy, but not yet. There are certain patterns that play out over and over again that helps you and me come to that conclusion. And this week those patterns have arrived. I'm going to look at them, and I'm also going to look at how I timed the market probably perfectly. You can be the judge by watching my previous market recap videos and my follow through in this week, whether I timed it well, and I hope to continue to time it well in future too. How did I time it last time? This is a picture from Market Breadth. This is of the Nasdaq and NYSE, a drill down from the market breadth total view. This is this week's picture. If you look back 2 weeks ago, the two oscillators that I talked about, the 3-month new high low and the percentage of stocks above 50-day moving average, they were either at extreme oversold condition, like for 3-month new high low, or very close to the lower threshold for the percentage of stocks above 50 MA. That was too oversold, and I publicly mentioned that I was going to buy, and I bought. I shared some of the stocks. They did quite all right. And you can see that oversold oscillators are not oversold anymore. Whether you look at 3-month new high low or you look at percentage of stocks above 50-day MA. That is perfect market timing. Not worrying about what news or media are telling. Trust the objective analysis based on extremely reliable data. Cannot be any more reliable than that. I use data from Refinitiv. Trust the analysis of market internals. And these Nasdaq and NYSE were not the only areas that were oversold. Here I move to further drill down from the two exchanges to the individual major indexes: Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500 and S&P 500. Let's look again at 3-month new high low. Oversold, 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 oversold. Not near oversold, but oversold. For percentage of stocks above 50 MA, for DJI oversold, for Russell 2000 oversold, for Nasdaq 100 oversold, for S&P 1500 very close to being oversold, S&P 500 very close to being oversold. That was the time when I bought. That was the time to buy. Now the market has gone up. Therefore, it must be bullish. If I bought at oversold condition and it has gone up, has not started to come down, it must be bullish. But the question is, if I buy now, am I timing it perfectly? That is something we will look at. Let's also go up one more step and look at the market breadth total view. Again, 3-month new high low, percentage of stocks above 50-day moving average, extreme oversold condition, a bounce was likely, I bought, perfect timing. Now, of course, the market has gone up, but is it time to buy? When I am here on this chart, let me spend a few moments here, or maybe I'll use the live charts. Let me wait for the live charts. I don't like to use PowerPoints. This is the same from live charts, but I'll rather use the live system. I'll come back to the timing question throughout today's session because it is very relevant today. Greetings, I'm Sagar Nandi. You probably know that already, retired IT professional. Because I was in IT, I had a master's degree in computer science. Before that, I had an engineering degree in telecom. I had enough ability to develop my own trading system, gathering the best concepts I could get from many successful, famous people, traders. But I developed a system that is 100% real time and can be used in global markets, not only in the USA market. I trade in USA as well as other markets. You may contact me using my email ID info@superiorprofit.co and tradingprofitably@gmail.com. I share regular market and stock analysis on my website superiorprofit.co, X handle Superior Profit, this YouTube channel Trading Profitably, where I share only high probability trading ideas. They are high probability because I combine technical analysis with market strength, sector industry strength, fundamental strength, and also seasonality from time to time. I do all that using only one single suite of systems, that is Q systems. It runs on Metastock for all the components. It also runs the technical analysis component on TradeStation. Last slide. This demonstration is for educational purposes only. I am not an investment advisor. It's not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades, and of course I am responsible for the outcome of my trades. Options trading can be risky, does not have to be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Now let's look at the live charts and talk about market timing, looking back and also anticipating forward. This is a chart of dollar index. In the last market recap, I mentioned that it will not be unlikely for dollar index to come down to trendline support and then probably go up again. And I also mentioned it would be difficult, not impossible. Everything is possible in technical analysis in the market, but it would be unlikely that dollar index would break through this trend line support, this ascending yellow direction line support, this white direction line support, and then again this trend line support in one go. That has not happened before, not for dollar index. Therefore, even if it comes down, which would help the market, that's what I explained in the last market, it was likely and it is likely that it will recover at least somewhat, and if that recovery indeed comes next week, that may put pressure on the market. Again, I anticipated dollar index to come down, test the support. It has tested the support. In fact, on Friday we have a bullish indecisive candle. It may come down little bit more. I see weekly has a support little bit more down the current price level, but it is likely again that it will bounce and that may put pressure on the market. That is a signal to decide market timing, whether it is time to buy or not. This is one signal. When I decide or you decide on market timing, it is based on accumulation of many signals, synthesize them in our mind and then decide, is it time to buy or to wait. The dollar index is telling that it is bullish, market is bullish if dollar is coming down, but there are too many supports on dollar index that it may be better to wait. Wait for what, you may ask? Wait for a stock that you identified already at the market close on Friday or during the weekend, but don't buy it. Didn't buy it at the close on Friday, waiting to see next week if it can go above Friday's high. That is what to wait for in such a market. But this is only one signal. We are going to look at many other signals and hopefully come to the same conclusion that I have, that it is time to buy if at all we are willing to trade. It's not a time to short, but better wait first. When I am here, let's look at the market breadth total view. It is on my custom menu. A single colorful chart telling a lot of things, some things to do, some things not to do. And I noticed actually that when loading this week, this chart was taking time. So I had that picture captured in PowerPoint already to save time during the session. Okay, time to go back to PowerPoint for that single chart. When the Hindenburgs came, one after another, and the bangos came, irrational exuberance, thanks to me, Mr. Ian Woodward, who devised this mango signal. May him rest in peace. I was buying. It was still going up. What was going up? The total view custom index was going up. That is a holistic view of the market. Market was bullish. I was buying, but because of the concerns from Hindenburg and Bango, I was buying high dividend yield stocks. Those all did eventually quite well, in fact. Even last week, I discussed two high dividend yield stocks. That was perfectly timed. Again, this week's theme is timing. I'll look back on those stocks. However, notice that market pulled back after the warning. Not a lot, somewhat, between 5 to maybe 8-9%, depending on which market index you are looking at. Not a lot. It pulled back. Then it recovered a bit, and we already saw the 3-month new high low and percentage of stocks above 50-day MA recovered. That was what was expected. It was not expected that the recovery would turn the market into an uptrend. It could, but that was not the expectation. And market has recovered, but it has not turned it into an uptrend. What is more, there was a lot of hype in recent days about Google's earnings, about Microsoft earnings, about Apple's earnings, as if those were going to change the market overall. I don't see that, or you don't see that from this total view chart. It has not changed. It is still in a downtrend. There is no higher high, higher low. And though market did recover a little bit, couldn't even close decisively above the 50-day moving average. What's more, this is a breadth chart. What is conspicuous by its absence? Not a single accumulation count, not even one in the last 2 days move up. Of course, there is no Eureka, which is Mr. Ian Woodward's equivalent of Ken Slim's follow through day. There is no follow through day, there is not a single accumulation count of even one. That tells that yes, it recovered probably because of the hype, if you would like to call it hype, of the few mega caps earnings that came out to be positive. But that did not change the market's bullish breadth. Did it recover from extreme low? Yes. Therefore, it must be going up. Therefore, it must be bullish. So if I had to choose between buying and shorting, I have to choose buying, but not yet, because it is not in an uptrend yet. Or there is no follow through signal. There is no accumulation count yet. Second signal that we looked at, that is telling that it is okay to buy, but wait. Let's look at sector industry stock breadth. We are still at studying breadth because that is a very powerful tool to know what is really going on under the hood. Sector industry stock breadth, sector industry and stock from 1 month to 1 day. 1 month long term view is bearish. All the Q signals are color coded, intuitive. 1 month bearish, 10-day bullish. This week 5-day bullish. 2-day and 1 day they are also bullish. This is bullish. As I mentioned, if I have to choose between buying and selling, there is no way to choose shorting. Selling means shorting here for swing trading. There is no way to choose shorting. It is all green. No hint of weakness, and it is not overbought from bucket analysis. When it is overbought, the percentage of stocks in the uppermost bucket, this bucket, that is in fact the percentage of stocks above upper Bollinger Band, needs to go to 30 to 40% level. It is at only 9% plus now. Other way to assess overbought condition is to see if the percentage of stocks in the uppermost bucket has gone up by more than 10% in 1 day. It has not. So it isn't overbought in either of those ways. In any ways so far it is not overbought, but it is bullish. The percentage of stocks above mid Bollinger Band has gone up by 7% from 55 to 62. Here also did not go up by more than 10%. It is not overbought, it is bullish. I have to choose to buy based on sector industry stock breadth. That was the third input. Now let's look at the external view of the market using the market ETFs, SPY first. Daily broke out of the triangle pattern. If you were watching the market for last couple of days, you would notice that it was inside a triangle pattern, and when it is inside a triangle pattern, there is no preferred trading direction, we wait. But on Friday, it broke out of the triangle pattern, broke to the upside. That tells us it is time to buy. However, it has a bearish indecision at the top that is telling wait. Also, though there was a lot of news hype, whatever you may call, I call it hype, about mega caps, apples, etc., the weekly backdrop is remaining bearish. Does not allow me to take a trend following long trade. That is also showing that market recovered, but even the external view, because of the backdrop being bearish and a bearish indecision at the top coming in daily, it is better to wait. QQQ. QQQ is looking better. Instantly we know that because here the backdrop has changed to bullish, the weekly backdrop, and in daily we have the same bullish flow signal but no bearish indecision at the top as we had in SPY. So if we had to choose to buy something between QQQ SPY, we would choose QQQ. However, we also know that QQQ is heavily influenced by mega caps. Why QQQ is looking better than SPY is because mega caps did well. That may change. We or I may not time our trades based on a handful of 8 to 10 stocks performance. So just looking at QQQ is not enough. We have to drill down if we at all wanted to trade based on QQQ charts here. Drill down into QQQ, analyze the constituent stock, see if there is broad strength, find a suitable stock at low price point at a buy point and time that way, not going for QQQ which may be whipsawed up down by a few mega caps. Dia. Dia is also stronger than SPY. Here also we have weekly backdrop bullish, and we could time the market by buying Dia when it was at the trendline support. That is a way to perfectly time buying when it comes to trendline support and starts to go up. It went up. However, we again have a bearish indecision at the top. That is telling together with weekly that it is time to buy. If at all I want to buy or short, I would buy, but because of the indecision at the top, it's telling us to wait. And lastly, let's look at IWM. IWM, that is small caps, are not telling us to buy. Not at all I buy. Forget about waiting. It's not telling us to buy, though it broke out of the trendline resistance, broke out of the triangle pattern. That breakout happened on Thursday. You could buy at the close on Thursday. That would be perfect timing. Talk about timing. That was the perfect timing. But not on Friday. Friday, if you went to the intraday chart, this is intraday chart, pivot chart, 5-minute interval, it opened with a huge gap up. All the market ETFs did that, and IWM did the worst after that. Throughout the day, it kept on coming down, closed near the low of the day. That is not an instrument that I would like to buy. Is it bearish? No, it is not bearish. If I go back to weekly daily, it is not bearish. It's still closed with a sizable move up, 1.21% to be precise. But the coming down from the opening throughout the day is not giving us a signal to buy. When we look at the external view together of the market ETFs, it is telling us that if we had to choose between buying and shorting, of course we would be buying, but it's telling also to wait. And the strongest signal for waiting this week is actually from technical breadth, a unique Q component. First look at the weekly technical breadth. Longer term is always useful to decide the preferred direction. Whether we look at all setups, trend continuation, even reversals, the weekly is telling us to buy. Why did I say that technical breadth is giving the strongest signal to wait? That is from the daily interval. And specifically from this alert flag, red candle high alert, because the percentage of stocks showing red candle high is above the highest threshold where we may pause buying. What is red candle high? It is a bearish candle at a high price level. What does it tell us? We saw the market was oversold and it recovered from the oversold condition. We saw that from the very valuable market breadth charts. We also saw it is not bullish. However, some stocks went up and then on Friday they dipped. A lot of stocks, not one or two. 11.2% of all the liquid stocks that I monitor, it actually came down, a pattern similar to what IWM showed. And this is the strongest pattern this week that is telling us to wait. But that is not the only signal on the daily chart. If you look at the all signals, where is the bullishness? Shouldn't we expect a lot more bullish signals than bearish signals if the market was so bullish? If we read the news and the hype about Apple, Google, and Microsoft, it isn't there. And objectively, it is telling that internally, as far as swing trading is concerned, Friday at the close would not be the best time to buy. Reversals are much more bearish than bullish, that is in sync with the red candle highs that are coming. So it is telling, taken all together, that we may buy. I will look for a few stocks that you or I could identify at the close on Friday, but still not click the buy button. But before that, let me go back and review how I timed a few stocks. These are the 5 stocks I discussed in the last market recap. Zoom, Gold, GOLD, and GPS. About these 3 stocks I already followed up in a tweet when I started booking profit. You may look at my Twitter page. I'll not look at them again. I timed it well. I booked them with a profit. I took all those trades with short puts, naked short puts. I liked them in terms of fundamentals and I booked profit as well. What I now want to look at, 2 more stocks that I didn't follow up yet on Twitter. One was BSBR. I mentioned today also one excellent way to time buying is to look for trend line supports, and if we have longer term trend line support in weekly, that is all the more valuable. That is what we had in BSBR, and after I identified it, it has nicely gone up. It is very bullish. It was one of the high dividend yield stocks. And what pattern did I use to identify it? An extremely valuable timing pattern, and that pattern I have mentioned many times. I'll come back to that pattern even more times today too. That is, at jump thrust low, price extreme low, suddenly came big move up 3 while we had excellent weekly trend line support. That was the time to buy. I timed it perfectly. I bought it. I publicly announced it before knowing the results. I have already booked at least a partial profit. It covered much more than the risk distance. Also notice how I identified the stock. That is part of finding a stock. Timing is to buy, click the buy button on brokerage, but how do I find the stock? BSBR was a diversified bank when I shared it last week, but we also saw, I showed that diversified banks industry was not strong in the USA. Then I further showed that this was a South American bank, Brazilian bank to be clear, the name says that also. And I used Q index, you could do the same, to ascertain that diversified banks in Brazil market, they were indeed very strong. In fact, it was stronger than QQQ even at that time. Relatively speaking, we could analyze all that, time it perfectly, booked profit. And the other stock that I mentioned was ITUB. Again, another South American bank. Again, it had trendline support, great fundamentals. I timed it well. It also gave a profit. Here the profit is not so large yet. You could book some profit or you wouldn't, up to you. It is a very high dividend yield stock. You could continue to hold. But this stock also gave a profit as far as swing trading is concerned. So all the ideas that I shared in the last market recap, I could book profit in all of them. Some more, some less, but could book profit in all of them. 3 of them I traded with short puts. They are fundamentally strong enough for me. I could hold them long term if I wanted to, if I got assigned. I didn't get assigned. I booked profit, and 2 were high dividend yield stocks. That is how I timed the market. Not only last week, but before that, before that, and I hope it will continue in the coming weeks too, because I rely on objective analysis using very simple systems, and these follow-ups that I share is the proof of the pudding in eating. Timing the market. I'm now going to share a number of stocks which I could identify, therefore you could too, using the same systems, but you would probably not buy for one reason or another. For the market level reasons why it's time to buy, but wait first. I explained that already. Now let's look at a few stocks. Again, no prejudice whether it is a meme stock or not, doesn't matter. GameStop, I just apply the objective analysis. Let's look at its fundamentals. And while Q Vital is retrieving the data for the peers, I can look at the industry score. One click, one glance, it's time to buy. As far as industry of computer and electronics retail is concerned, it's time to buy. No question, needs only a second. Let's go back to the stock scorecard. 100% of peer stocks went up. It's time to buy. No questions asked. It is a high growth stock. Valuation is not good. That's fine. We need either valuation or growth to buy a stock. If we are following Q guidelines, allows me to buy. Insiders are buying. Also notice the uptick in earnings growth. Why did I then say that there may be something about the stock that would tell us not to buy on Friday? Yes, of course, market level, I already concluded that, but is there something at the stock level too? We'll find that out from the technical charts. GME. A great breakout in weekly and daily both. closed above the white direction line, closed above the yellow direction line. Friday price already went up too far above the recent low. Remember, I mentioned every day it goes up, our risk goes up, reward goes down. So Friday would not be the time to buy. Coming to the theme of perfect timing, when would be the time to buy this stock? That would be Thursday, not Friday. What did we have on Thursday? We had a bullish flow trend following long setup. Weekly was already bullish 1 week ago, so certainly this was bullish on this Thursday also. This means the backdrop color. So the weekly daily taken together gave us a very unambiguous buy signal on Thursday. What else did we have Thursday? Price extreme low, jump thrust low, all of a sudden came big move up 3. Almost never fails in a fundamentally strong stock. In this case, also in a very strong industry. Thursday was the perfect timing day to buy. Using objective simple analysis, Thursday would be buy, Friday I would be booking partial profit. That's how we time the market. GME, too late to buy now. Is there a stock to buy now? Yes. GPS, I traded it already. I shared it. Last time I traded it using short put. On Thursday, it gave another buy signal again. That's also something to keep in mind. We already know GPS's fundamentals are great. How great? Let's find out again if you don't remember. Because I look at these stocks regularly, I remember that fundamentals were great for GPS. We'll review that again. Go back to the chart before that while Refinitiv is sending me data. Weekly had a support nearby. Last week's candle was already bullish shape. This week's candle was bullish already when on Thursday we had this week's candle was bullish shape already when Thursday's headwind signal came. So if you applied all the checklist conditions of headwind reversal buy setup, and certainly it is a reversal buy setup because the stock was in a downtrend, you and I would buy on Thursday. We already have sizable profit on Friday. If price goes up for one more day, we would cover more than risk distance. That would be another perfectly timed trade. Would I buy on Friday? No. Would I buy on Thursday? Yes, that is perfect timing. About the fundamentals. Because I traded it recently, I already knew the fundamentals, and let's look at it. Cannot be much better than that. Valuation, great. Earnings quality, great. Short squeeze potential, very good to have. Funds accumulation, great. Analysts, if you want to put weightage on them, bullish. 75% peer stocks went up, steadily going up, pays a small dividend, not negligible, but small dividend of 2.78%. Of course, the stock makes money. I am always happy to see this tick pattern. Coming down, then reversing. These are turnaround candidates in terms of earnings growth and revenue growth. Everything about the fundamentals was great when I traded it. 1 week ago I shared it, and now also it is remaining same. Thursday would be the perfect day to buy. Remember, every day the stock moves in our favor. If we are led by one day, risk goes up, potential reward comes down. Thursday would be the time to buy. I have now a stock long position on GPS. The more you use this objective analysis, you are confidently able to share. Not all trades I share with public. That's not my aim for my life. But I am quite confident to share the ones that I discuss during these sessions to educate other people. Hopefully they get something from these videos. Because it's not the point about making profit in every trade, but whether The disciplined approach works over hundreds of trades, and it works if you are following my videos and Twitter posts. Works for me. Whether it works for you, you have to find out. If it does not work, you have to find out why, if you wanted that, and fix the reasons why it is not working, if they are not working. Okay, GPS, Thursday was the perfect timing day for buying some more stocks. XP. Look at the fundamentals as well. I came to industry for XP, investment banking and brokerage. We look at the industry and it tells us that it was very strong but weekend. So if you or I wanted to buy, not buy on Friday at the close, even if the fundamentals are great, even if the chart looks great, but wait. This is another pattern that is telling us both the score and the deceleration, that don't click the buy button on brokerage yet for a stock in this industry. However, that is an industry level analysis. Why I said however, we combine all these insights and then decide whether our risk tolerance allows us to buy the stock. What did I see in the stock scorecard that led me to say that? That was the extremely high dividend yield of 13%. Earnings is some distance away, enough for taking a swing trade, trying to close it before the earnings. But in any case, the dividend itself is reason enough to buy, even if the industry is decelerating a bit. It's a high growth stock, funds are accumulating, medium valuation, has a short squeeze potential. You may notice this week I focused on several stocks that are having fund accumulation with short squeeze potential, that are at a relatively low price, just now starting to going up, and are either with earnings growth or great valuation, or sometimes both. But here, high growth, fund accumulation, short squeeze potential, I always like this tick up. Turnaround candidate in earnings growth and revenue growth is steadily going up. The stock is steadily going up and the company makes money. So this is a stock depending on your risk tolerance, meaning if you are okay to hold the stock for its dividend, you may ignore the slight weakness in the industry and buy it. But let's look at the chart first. XP. The extremely valuable pattern once again, not at price extreme low, but it did drop sharply, came to the weekly long-term watermark support, then went up with what? From jump thrust low with big move up 3. That happened on Friday. Why you could wait for Monday? That was because of the upper tail in the candle, or you could buy. You could buy if you had enough risk tolerance to hold the stock long term based on the dividend yield. I already took a position in the stock looking at the dividend yield. If the dividend yield was not enough for you to hold the stock long term, you would rather probably wait to see if price is going above Friday's high. That is because of the industry deceleration and also because of this upper tail in the candle. I took a position based on the dividend yield. I'll share 3 more stocks today. PFS. It's a banking stock. PFS. Let's look at its technicals. weekly for PFS came right to the watermark support, displayed the early alert that it could potentially go up, displayed that using the bullish indecision cluster. Backdrop color turned from bearish to neutral yellow, then bullish. This week bullish again. Weekly is telling it's time to buy. This pattern of double bottom, backdrop changing color and the shape becoming so bullish that it is closing right at the high. Remember, several market ETFs showed indecision at the high. Some showed upper tail, not PFS. PFS closed right at the high of the week. That is very bullish. But the daily is showing that there is a trend line resistance in daily and then few more that would tell us or you, hopefully, probably, that yes, if we had to trade this stock, it would be buy direction, but probably wait, at least wait to see if next week it continues to go up. What about its fundamentals? Great valuation. Funds are accumulating. Analysts are bullish. 95% of peer stocks went up. And dividend yield is a factor here too. If you are able to hold the stock long term, I am able to. Dividend yield is enough to take a long position without waiting. But if not, it would probably be advisable to wait because of the trendline resistances. What I also like is the tick mark in both earnings growth and revenue growth. That is turnaround candidate. I love them. And its industry score, regional banks, strong. Earlier it was weak. Combined industry score fundamentals with great dividend yield of 6.17% and the technicals tells us it's only to be traded in the long direction. The question is whether to buy on Friday or wait is answered by the dividend yield. If the dividend yield is enough, you could take a long position already, and I did that. I have a long position in PFS now using stocks. Two more stocks, right? One is an Indian stock, one of the largest IT consulting firms that is also listed in the USA, used to be one of the favorite of Ken Slim traders, still very reliable stock, professionally managed, Infosys. Because it is actually an Indian stock, I use again the power of Q systems. I don't want to do a peer analysis of the stock in the USA market that would bring out peers like IBM, Accenture, but I would rather do a peer analysis of the Indian ticker symbol that would do a peer analysis with the Indian IT consulting stocks, not like IBM, Accenture. That would be somewhat misleading. And Q allows me to do that. That's how I identified the South American diversified banks last week. That's how I'm identifying Infosys, Infi, traded in the USA, traded in the India market this week. Let's look at the USA symbol first, Infy.k, INFY. There is no buy setup. What we have is price coming down in weekly, then backdrop changing to neutral, and quite importantly showing a bullish indecision at the bottom. It may go up, but there is no buy setup yet. What I see in the daily is more encouraging. It had a sharp drop. All the IT firms in India dropped, so that is not surprising. At the very bottom, very near that, came a bullish headwind. That was not a buy point. Then had a gap up day. That was important because that had the big move up 3 all of a sudden. When a stock is falling sharply, then we have a big move up 3. My hypothesis is, and it tends to work quite well, that some much bigger player than me stepped in. And as is often the case, it pulled back little bit. On Friday, it turned into bullish candle color, and if you see here, very little bit, but price went up on Friday. But this is the USA market ticker. To get the true strength or weakness of the stock, I will have to, or I would rather look at the Indian ticker symbols. I'll do that, but before that, let's look at the fundamentals. See how I am finding stocks and timing them perfectly, and sometimes waiting. Great valuation plus high earnings growth. So it's a 3-star buy candidate. Great earnings quality. Of course, Infosys is a well-known stock. Reasonable dividend yield of 2.68%. That's reasonable in the Indian context. This is the Indian ticker symbol. That's why all the peer stocks are Indian IT consulting stocks, not like IBM, Accenture, as I mentioned. Steady revenue growth. The 82% peer stock still went down on Friday. The industry itself is weak, as I mentioned. But I like this tick mark, turnaround candidate. What I also like is the fact that on Friday, in the Indian market also, it went up. It went up, but what happened to the IT consulting companies? There is an index for India IT consulting companies or IT firms, Nifty IT. Let's look at the index. Nifty IT is continuing to come down in weekly. The weekly is looking much weaker than what we saw for Infosys listed in the USA. Interestingly, talk about timing. The bearish headwind in weekly came at the very top, not near, but at the very top. But what I also notice is that for Nifty IT, there are two bullish headwinds, no buy signal yet, and I also notice there are multiple trend line supports. This is Nifty IT. It still went down on Friday. It is near jump thrust low. It is likely that it will reverse because it has trend line support, is near jump thrust low, has bullish headwinds, but we have to wait. There is no buy signal yet. And lastly, I would like to go back to Infosys listed in the India market. The IT index in India for consulting firms is down on Friday, but notice, just like the Infosys in the USA market, Infosys in India market also went up on Friday. The chart pattern in daily is similar to Infosys in the USA, but why I am encouraged by the India ticker is because it has a very long-term support in weekly. These long-term supports work very well. What it is telling me is to keep an eye on the stock, and if it continues to go up, I would not mind taking a long position. But it is also telling me there is no buy signal yet. This is another example of a stock I found. I am very interested in buying, but wait. I'm going to share one last stock. We are near 1 hour point, and probably you will find this stock also interesting. Maybe unconventional, uh, but CD. Many of my stocks are not what other people would regularly share on social media. I am confident sharing them because of the past performance of similar stocks that I found that I shared publicly. CD. Look at the colors. Does not get much better than that. Series of bullish colors. Great valuation, great earnings quality, a short squeeze potential, funds are accumulating, insiders are buying. Today, during the weekend, I focused on these scores: short squeeze, fund manager, insider buying, and also dividend yield. This also has a decent dividend yield of 3.4%, has earnings growth ticking up. I love these turnaround candidates. Revenue growth ticking up. I love the turnaround candidate for revenue growth as well. And 82% of peer stocks went up. Let's look at the industry scorecard. Industry is telling me to wait because it weakened little bit. Earlier it was much more bearish. It's telling me to wait. 5-day period is showing high acceleration, but Friday's score itself is telling me to wait, and the dividend yield is not so high that will enable me to buy on Friday itself. So as far as fundamental and industry score are concerned, they are together telling me to buy, but wait. What about technicals? Siri. Weekly had a very sharp drop. While it was still falling, backdrop color changed to neutral. It was a down week 1 week ago. This week it went up. It's an up week with high volume. And importantly, it has a bullish indecision at the low. In the daily, I see very encouraging pattern. Price extreme low, jump thrust low, came a big move up 3. That was a few days ago when we also had a bullish headwind. As is not uncommon, price came down little bit. Now there is a trend line resistance. The moment it breaks the trend line resistance, that will be, in my view, the perfect time to buy. But now it is telling me to buy, but wait. That is how both at the market level and at individual stock level, the systems I use, the Q systems, a single suite allows me to decide that it is time to buy when, but to wait when. Sometimes it is time to buy and buy, not wait. Like for some of the stocks I shared with high dividend yield, I bought some of them. And other stocks like CD, like Infi, there I would like to wait. That's all for this week's webinar. Thanks a lot for joining. I look forward to seeing you in my next session again. Have a great weekend, and as I always say, as this live analysis hopefully shows, there is no reason not to do that. Trade profitably. Thank you.